All right. Good morning, fellow traders, and welcome to today's live trading session. As you know, today is May 2nd, 2022. And what we're going to do is what we typically do every morning. We first look for day trading opportunities, and then after that, we'll talk about what's happening in the market as far as geopolitically, fundamentally. And then after that, we'll do some top-down analysis where we start at a larger time frame or a higher time frame and then work our way down to really find some high probability trading opportunities. But with that said, I guess we can get going. So yeah, good morning, everyone. Good day, Joe. Good morning, Ryan. Good morning, Adam. Good morning, everyone who is in attendance and those who are watching later. So with that said, I guess we can move forward and talk about what we're seeing right now. And we may be a little bit late right now. As I was preparing this particular for this particular presentation or session for today, this was one of the trades that we were looking at. We were going to look for a sell on NZDUSD or Kiwi USD. That's what we were going to look for. And it looks like it's pushing lower right now, but we may be able to get in once we drop down to a trigger time frame. We can look for our execution. But as you guys know, let me ask you guys this question. Is this trade bullish or bearish, or is this pair bullish or bearish based on what we see on a 1 hour time frame? Now, let me also emphasize that this is based on our momentum strategy. This is one strategy within our arsenal that we use. And of course, this is something that you can use. It's very simple. But okay, so Joe said bearish, Adam said bearish, dollar strength, and yes, both of you are correct. We do see a bearish bias. Price is making lower lows and lower highs, except for right here, it made an equal high, and then the push down and made a lower high. Therefore, what we can assume is that on this particular time frame, which is the 1 hour chart, remember the 1 hour chart is where each candle represents 1 hour time frame. Based on this 1 hour chart, price is moving down. So then what we want to do, we want to look for opportunities to sell this on a pullback in price. And what happened? Well, price pulled back all the way back to our structure support, or former structure support, which became resistance right around there. Let me change the color of that. But we can see that price came up here, found resistance, and then we see price slide or start heading lower. So then there may be an opportunity for us to exploit this particular sell opportunity right now. What I'm going to do is remove these lines, and I'm going to drop down to our trigger time frame. So then let me ask you guys this: on a 1 hour pullback. Now, for those who are new, this is completely new for you. Don't worry about it. The more you see it, the more you're going to understand exactly what you need to do. And of course, if you need me to, I'll walk you through it, take you by the hand and personally show you what to do. But for this particular setup, since we're looking at this 1 hour pullback sell trade, what will be our trigger time frame? Of course, there's more than one answer. So then I'm willing to accept any answer. So then, okay, Stuart said 15-minute, Joe said 15-minute. Yes, and the both of you are correct. What we're going to do, we're going to drop down to the 15-minute time frame, where each candle represents 15-minute duration. All right. Okay. So right now we're looking at the trigger time frame, and let me ask you guys just a quick question. Those who do know, I know for some of you that are new, this could be sort of hard to understand for now, but trust me, it's pretty easy once you get the feel for it. So let me ask you guys this question. Those who's been with us for a while, on this pullback higher, on this correction higher right here, on that correction higher, do we see a 3-wave pullback? Yes or no? Do we see a 3-wave pullback? Okay, Rob said yes. Adam said yes. And yes, the both of you are correct. We do see a three-wave pullback. We do see what we would call an ABC pullback. In other words, we see a leg A, leg B, and a leg C. And right now we got the bearish confirmation. So then what we're going to do is look for an opportunity to sell this pair right now on a pullback in price. Hopefully we'll get that pullback. We may not get it. But if we do look for the pullback, then what we will want to do is look for structure. And we see that we have structure right around here. This is where former structure is, or where resistance is now. And if we can get a pullback up into this area, then what we can do is look for a particular sell opportunity and trade this to the downside. So then that's what we're going to look for right now. I mean, it would have been great if we would have got in right around here, up here. But of course, what we typically like to do is wait for bearish confirmation, wait for price to break this structure right here, which acted as support. Well, it acted as resistance right here. But then once it was broken through, that resistance becomes support. And we'll wait for price to come back, retest this area of structure again, and then we'll look for a selling opportunity, right around here. That's what I'm going to do right now, is just wait for price to come to me. I will not chase a trade. I will wait for the trade to come to me. So that's what we're going to do. Remember, again, we already have this push to the downside. Once we saw this push like this, then we know that price is really selling off. It's the end of this correction higher. And then what we need to see right now is a pullback to retest this area and then a slide lower. Now, if we're going to look for that, then we can ask ourselves, okay, where would our target be? And one of the ways we identify our target is by using a fib extension. There's other ways as well. I may go through one more way, depending on how much time we have. But what we're going to do is take our fib extension, take it from the high all the way down to the low, back up to the high again. This is what we call the fib extension tool. If you want to measure how far price extends beyond a point, then you could use this tool. So in this particular case, if we're going to look for an extended move to the downside, what we can do is target the 127 fib extension level. What I typically like to do is target maybe a few pips above that level, maybe 2 to 3 pips above it, maybe right around 64.15. Right around here is a good area to target. So what we can do is just simply wait for price to pull back. That's all we can do right now. If you didn't get in at the beginning of this turn or this swing at the highs, then you just have to wait for price to pull back to an area of structure and then look to enter your short or your sell. So then what we typically do, we'll place our stop loss back here. Our stop loss is when we will exit the trade. So if we do decide to exit a trade, or if price does push all the way up, once it hits the stop loss, we will have a loss. That'll be a losing position or a losing trade. But let me do this right here. Okay, so then if we enter this trade right now with price a few pips above this swing high right here, this would give us a 1.67 reward to risk ratio. So it's still good. Typically I like to shoot for something more closer to 2 to 1, which means that for every position we get or execute, we're going to make 2 times what we would have lost if that trade would have hit our stop loss. So then typically that's what we try to look for, a 2 to 1 reward to risk ratio. But in this case, as you can see, it's 1.67 reward to risk, which is still good and still decent.
Gotta go with the market view.
Yeah. So then, all right. So then, yeah, we're just going to wait for this to happen, and we'll see. What I may do, I'm going to place a price alert right here, right when price reaches this area, and we'll be notified during today's session if price reaches this zone. So you say price retraced to structure. on 15-minute. Look to sell, question mark. All right, so then I got an alert right here so that if price does retrace up to the zone, we'll be notified. All right, if there aren't any questions, then we can move on to our next setup. But I think Marvin may have something that he may want to share, so I'm going to pass the mic over to him, and he can share what he's going to share. Yeah, but I'll just simply make it brief. I was just going to talk about how this particular pair, New Zealand dollar versus US dollar, and just even most dollar denominated assets, we can expect, especially for this week, we can expect for us to see a continuation of dollar strength and more moves to the downside. One thing I do know about the New Zealand dollar, they're also in a rate hiking cycle as well. They were one of the first, along with the Bank of Canada, to start hiking interest rates, which is, of course, supportive for the Kiwi or the New Zealand dollar. But in this case, since the US dollar has already aggressively baked in, or there's this huge expectation of consecutive rate hikes at each monetary policy meeting, that's going to be the favorite currency across the board. So then we see that even this trade, the New Zealand dollar versus US dollar, is in agreement with that whole fundamental backdrop, with the US dollar strength being fueled by rising interest rate expectations. And of course, that's going to benefit the dollar. Even though the New Zealand dollar, the Kiwi, is benefiting from the whole inflation or stagflation outlook as well. But in this case, the dollar is king. The dollar is going to always be preferred simply because it's the world's reserve currency. And a lot of trade, a lot of business is done in the greenback, in the US dollar. So then, we can expect this pair to continue sliding lower. Even though this is a risky week for the dollar. But just like I said, we're expecting the Federal Reserve Bank to hike rates, which we will talk about later in today's session. But I just kind of wanted to point that out, that, not only do we have a technical reason to enter this trade, but also we have a fundamental or intermarket basis reason, you could say, to enter this trade as well. Yeah. Yep. So yeah, all right. So yeah, with that said, I guess we can move on to our next setup. And all right, okay. Yeah, it looks like this one wants to correct up towards this level right here. So then we'll definitely be notified if it does reach this point. If you want to, you can place a pending order at 64.40 if you want to. If you want to, you can do that. Place a pending sell order at 64.50. That's the price where we have this dashed line at, and then you can place your stop at 64.55, around there. You take profit around 64.15. So that's if you want to do something like that. You can, if you want to. So I guess we can move forward. Okay, so yeah, the next pair we're going to look at right now, let me go to the 1 hour chart. The next pair we're going to look at right now is a pair that we haven't looked at in a long time, because usually these two currencies are sort of correlated to some degree, but the US dollar, Singaporean dollar. And we're currently looking at the 1 hour time frame. And as you guys can see, price for the most part was moving to the upside on this pair. We saw price make higher highs, higher low, higher high, higher close, higher low, higher high, higher low, and a higher high again. That was when it was in an uptrend, which is one thing that you guys need to know. An uptrend always makes higher highs, higher lows. But right here is, when things shift a little bit, we get what you would call an equal low right here, pretty much. Price pushes up, forms a lower high, and then we get a lower low. So then at this point, we're looking for a sell. However, what does price do? Price pushes all the way up, forms an equal high. So let me ask you guys this question, or let me delete this so you guys see a little bit better. When price forms this equal high right here, what type of pattern does it form? When it forms this equal high, you know, right here, what type of pattern does it form? Or what shape does it form? Let me ask you guys that. If there was a letter in the alphabet that you can look at, which is a clue, I'm giving you guys a clue. What would that be? What pattern, what shape does that form? Because that will help us to determine what we may need to do. Okay. Remember? Yep. Okay. Yep. Greg said it. A V bottom. Yep. Exactly. A V bottom. Exactly. So then, you know, what we have right here is this V bottom. We have a letter V right here. Boom, boom. And they push all the way up. And whenever you see that, then that's typically signs of a reversal in price. So then what we can expect is for price to pull back and then to eventually push higher. And that's what we're expecting. We're expecting that to happen. And as Marvin mentioned before, you know, we're expecting some US dollar strength right now. There's a momentum, there's a bias, you know, in favor of the US dollar. Yeah, and that's what we should see. I know Adam said V shape to form inverted head and shoulders. Exactly. An inverted head and shoulders is something like this. Is this pattern right here. But in this case right here, we see it right here. We see the left shoulder right here, the head, and the right shoulder right here. It could have formed already, or it may be in the midst of forming right now. But what we're going to expect is a push to the upside from here. We see what we call an inverted head and shoulders continuation pattern. So then we're going to expect price to push to the upside because we see that particular pattern form. But as you guys know, we see the V bottom. We see what appears to be an inverted head and shoulders pattern potentially forming. So then what we need to do is look for an opportunity to buy US dollar, Singaporean dollar. But before we do that, and I know we forgot to do that on the last setup, but I still do believe we're on the right side of the market. What we need to do before we do anything is look to see if there is something that we call directional confluence. We need to see if multiple time frames support a bias to the upside. So then right now we're looking at the 1 hour time frame. We see that the 20 SMA is sloping upwards, you know, which means that there's a bias to the upside. We see price making equal high, this V bottom pull back, and it could be extending higher. So then, you know, our bias for this would be to the upside. Now let's go to the 4 hour chart. Okay, 4 hour chart. We still have a bias to the upside. Price still making higher highs, higher lows. Price pushing up. 20 SMA, which is this blue cyan line, is sloping to the upside. This is the 20 simple moving average, sloping to the upside. So then we still want to look for a buy. Remember, so then 1 hour is bullish, 4 hours looking bullish, which is really all you need to have. But we also see that the daily time frame is bullish as well. Now, one thing we need to bear in mind also is this right here. Let me add this line right around here. Because right here we do have an area of institutional resistance, right? $1.39 is a banking level. So what we could see is a potential push up just to go all the way down and correct deeper before we see a extended move to the upside. You know, that's something that can also happen as well. So then we have to bear in mind that price could give us something like that because, you know, we're pretty much overextended. You know, price has been pushing up for a number of days without any pullback whatsoever, because as you guys know, this is the daily time frame where each candle represents 1 day. And for a multitude of days, price has been pushing to the upside with no retracement, no pullback at all. So then there's a possibility we can get a nice deep correction soon. So then that's something that we also have to bear in mind. But what we're going to do, we're going to look for still an opportunity to go long, and see what happens. But if we do get stopped out, then we have to know that, hey, price is going to give us, or price is giving us a deeper correction. We can just wait for price to give us that complete correction before we decide to enter in, or we could trade that correction lower. All right, so right now we're looking at the 1 hour chart again, and what we want to do is drop down to our trigger time frame to see what is happening on this particular pair, to see if we can get involved in it. So again, let's drop down to the 15 minutes since this is the 1 hour. Okay, so right here we see that price is correcting lower. Now let me ask you guys this a question. We want to see a 3-wave correction to the downside before we look for a buy. We want to see something like this: leg A, leg B, and a leg C. And let me ask you guys this question: do we see that now? Yes or no? I'm just going to ask you guys that question. Do we see that now? Okay, Greg said no. Dan said no. Yes, and the both of you are correct. We do not see that yet. So then what we're going to do, here's a little secret. We're going to identify where we feel price can go. So let me just do this right here. I'm going to do this and measure move right here. Ooh, right there. And let me do this. I'll explain this later because I know some of you guys may not know what we're doing right here. But this is all a part of our technical analysis, something that we pretty much do and pretty much made up to some degree. But all right, so then right around here in this area is where I'm assuming price is going to go, somewhere around here, and then we could see the sellers come in. So again, we're going to expect for price. I mean the buyers. Yeah, the buyers to come in. I mean, yep, exactly. So boom, boom, push up, and then we're gonna see the sellers push price all the way down into this zone, and then right somewhere within this zone is where we would look for a buying opportunity on bullish confirmation. So then that's something that we're definitely going to be on the lookout for, on this particular pair. So yeah, we can be a little bit patient right now and just simply wait for price to come to us. We don't have to chase price. We can wait for price to come to us. Now, there will be times when price will push higher. And if that is the case, then, we may miss out on a decent buy setup. And that's okay. You're not going to be able to execute every trade that you plan for. You're going to miss out on some opportunities because price won't do exactly what you would need it to do. So, in this case, what we're going to do, we're going to simply wait for price to come to us. And then we're going to look to buy on bullish confirmation. Let me add a price alert right here at 1.3844. Let me add that. And what I'm going to do is place the date, which is May 2nd. And just say price testing PRZ area on 15 minute. And then we can say look to buy on bull confirm. So yeah, what we'll do, we'll look to buy on bullish confirmation once price reaches this particular area. So then let me just put an arrow right around here. You can say, well, I'll do it right from there. Put an arrow right there. And that's what we're going to look for. We're going to look for something like that. Now, we don't have the completion of this target yet, but where could our target be? As far as we don't have the completion of this correction yet. I can tell this is the morning, and as you guys know, I was up late trading. Yeah, we're actually still in the trade, the pound CAD, for those who may not know. But yeah, we're waiting for this correction all the way into this zone right here. This is what we're predicting. We're predicting price is going to go to this particular area right here, and then we're going to look for the buyers to come in. Now, there's two ways we can identify our target. One way is this, and I'm just going to show you something that I typically do from time to time. What I typically do is go to the halfway point of this box, and then I will draw my fib extension from there, just to get an idea of where price could potentially go. So from here to here, then back again. This is one way. So, we have a target right here at the 127 or close to it, a few pips below it. This is one way we can identify our target. Then I'll show you the next way. And I was going to say, like, even when we do that, this is sort of like implied, like an implied, area that where we could potentially see, it as a good target. But we always want to look left. We want to see if it agrees with structure as well. So then we got the Fibonacci extension. So then one thing you can do is you can look left. You can just move your chart left and just see, okay, is there an area of structure that it agrees with? And of course, right now with the Fibonacci extension, you can see that our starting point was right here where this area of structure is. But even when we place our target, like, we want to look left and see, does that also agree? And of course, if we look left, we can see, yeah, in some ways it does. Like, we can see this area right here, could serve as an area of supply or area of resistance. So then even when you do your implied Fibonacci extension, because it's only implied, it's not something that's definite yet, you want to look to see within this PRZ zone, look left, see if there's any structure that could possibly confirm that this could be sort of like a low point or a swing point, and you take it to the end of this, the peak right here. But you also, even when you identify your target, want to look and see if structure confirms that this would be a good target, and because you want to see if there's that confluence, if there's that agreement. But yeah, that's kind of what I wanted to add along with what Melvin was sharing. Yeah. So then just like Marvin said, you want to look to see if there's structure, even with the target. Now right here we do see that we do have a structure right here where the highs are. Look left, structure leaves clues. We can see that we have resistance right here, resistance in this area, resistance in this area right here. The same area is where price hit it, and then found some resistance. Hit it, found some resistance, hit it, found some resistance. The same area right here and right here. So then what you may want to do even on this move higher is take partial profit or have a TP1, right around here. So what I'm going to do is add that right around here, maybe 31.71 is fine right around here. But we can have a TP1 right here and take partial profit if we do execute this buy. So let me remove this for now. Let me get this out of the way and remove this right here. But oh, okay. Yeah, I know Marvin wanted me to keep this right quick, so let me do this right here. All right. So but yeah, let me also remove this right quick. But yeah, this is what we're looking for right now on this particular pair. And as we mentioned before, price could very well push to the upside. So if it does, then we'll definitely miss out on this particular setup. But all is well, all is good. If we do see price break and close, well, I'll give it some time because I don't want to confuse you guys even more. I'll just keep it simple for today. But yeah, if price doesn't hit this zone right here, where this purple zone, then we won't look to get in. We'll just miss out on this setup and then move forward. Even though I think US dollar strength is there, and we may see price continue pushing to the upside. Now, if you want to, you can enter a small tiny position now, a small tiny buy, since this is moving up right now. But I'm not going to do it. I'm going to stay disciplined. I want to stay out for now, and hopefully we'll get a completion of that C leg to the downside, because the first leg is leg A, and then this retracement right here is leg B, and then we'll typically want to see a leg C into this purple zone right here. But we may not get that. Price may continue pushing higher, and oftentimes that happens. So you have to be prepared for when that happens. You can't beat yourself up. You can't get so upset if you missed out on a setup that you were planning for. because it's going to happen a lot. It's going to happen a lot of times. And remember, to make decent money trading, you don't really have to execute a trade every single day. All you have to do is execute a trade maybe 3 times a week. Like a very good trade. That's all you really need is 3 good high probability trades per week, 3 to 4. And that can make you a nice fortune over time. So, of course, if you miss out on this setup on a Monday morning, don't beat yourself up, because we have the entire week to find some other opportunities that we can exploit in the market. All right. So with that said, I guess what we can do right now, I don't think, okay, let me see. Yeah, I know we're in the pound CAD right now. It did push up. Yeah, okay, yeah. So then, yeah, for those who may need to see this right now, we're looking for a buy right here on the US dollar, Singaporean dollar. Looks like price may want to push up now. So we'll see. All right, let's go to pound CAD. As you guys know, this is one of the setups that we actually are in right now. And yeah, for those who may not know, price did push up and give us, it pushed up. We entered in somewhere, right around here, I believe. Yeah, at 59, and then it pushed up, came down, and then now it's pushing up again. So then we're still in this trade. It looks like it may want to find some resistance up here, but yeah, we could have gotten in again on this dip in price right here, this dip. So but yeah, as you can see, price pushed up, and it looks like it wants to maintain that momentum to the upside. But we do have a target right around 62.40 up here. So yeah, we have a pretty decent reward to risk ratio on this particular trade. But yeah, this is one that I was looking at this morning as a possible re-enter to scale in with a second position. Okay. And let's do one more US dollar Norwegian krona. Let's see how that's looking now. Okay, yeah, this one is looking, yeah, all of the US dollar pairs right now, they're pushing up right now after a brief pullback. So then right here we see this impulse correction, and then now price is pushing to the upside. So we probably missed out on this one as well. If you drop down to the 15-minute chart, we can sort of see that we have a 3-wave pullback right here. Price starts up here at this wick, leg A, leg B, leg C, and then we got this push to the upside. So we may have missed out on this as well. We get a pullback down to here, then we can look for a buy and then trade this to the upside. But yeah, that's all that I have in regards to day trading setups and day trading opportunities. I don't really have too much. As you guys know, it's a Monday morning, and typically on Mondays are typically days that you could avoid if you want to. But from time to time, you could find some decent setups. So then we see here on the Kiwi USD is continue, that one's continue to fall as well. So we may not be able to get in. And if that's the case, then oh well, just move on. So all right, guys. Now what we're going to do is shift to our second part, where Marvin's going to talk about what's happening geopolitically, fundamentally, and yeah, all right, yeah. But before I do that, I may want to touch on this Kiwi USD and what we're seeing here, because just like Melvin mentioned, we may not get that significant pullback, up to this area right here. You remember we want to, buy low. Well, no, yeah, buy low, sell high. We want to enter our sell at a good price, a higher price. And we may not get that correction up into the zone. And of course, it could be due to a combination of things. Just like Melvin said, Monday is usually a low volume day. But with this particular week of trading, we know that we're going to have even much thinner volumes due to the fact that this is a holiday week in many countries around the world, or I shouldn't say many, but a few major economies around the world. This is a holiday week. This is Golden Week in Japan. So a good portion of the week, there's going to be holidays in Japan, and we may see the banks, on holiday as well. But also in China, this is their week where they sort of celebrate their version of Labor Day. So then in China, along with the lockdowns that's going on there, we're expecting banks to be closed as well. But there's a plethora of holidays, and I know if you're in the Discord group, I posted the chart of the different holidays that are happening. There's even a holiday in the United Kingdom. So then, of course, since that is the case, we can expect thinner volumes as usual. But what makes this week so interesting is that it's not only the first week in May, where we've transitioned into a new month. We exited April, we're in May, and seasonally May is a month where we sell in May, go away. That's the seasonal trend that we typically see in the month of May. We sell, we make as much money as we can in April, and even for a little bit of the first few weeks in May, and then we sell and go away for the summer, because as you guys know, the summer malaise kicks in around June sometime. But of course, we're in an unusual season. Like, we're in a unique time in financial markets where there's a lot going on geopolitically. There's a lot happening fundamentally, even with what central banks are doing with this concerted effort to hike rates across the board. So then we may not see that traditional seasonal trend work its way through for this month of May. But it's also, good just to keep that in mind, that we sell in May, go away. So typically the month of May is a bad negative month for stocks, or, we just see traders sell. Hedge funds, a lot of your big bankers, they sell and they go away for a long extended summer vacation. So then so then that's what we typically see in May. But what makes this week interesting, just like I said before, is that we have a plethora of holidays, but we have these overlapping events where we not only have, holidays, but we also have important economic data coming out. We have four major central banks that are set to announce their monetary policy decisions this week. We have the RBA, which is during the Asian trading session. That's going to be coming up in a few hours. The RBA is the Reserve Bank of Australia. We also have, after that, we have the Federal Reserve Bank. That's the US Bank, central bank. They're going to release their monetary policy decision on Wednesday. And then on Thursday, we have two central banks. We have the Bank of England and also the Norges Bank, or the Bank of Norway, that's going to release their monetary policy and interest rate decision then. So then we have all of these conflicting themes. And plus, we not only, it's not only central bank data that's coming out, but we have PMI data, we have retail sales data, we have a plethora of economic indicators that are coming out that's going to introduce some volatility in the market. So for this week of trading, we have this complexity of looking at thinner volumes versus volatility and how that would look. So like I said, even with this Kiwi versus US dollar, it may continue to slide lower, primarily due to thinner volumes. If it does, it'll be because, the dollar, of course, is going to be the favorite currency, but there is thinner volume. We don't have as much participation. There's not as much liquidity or order flow, or, participants, as we usually would see on a Monday. And Monday is already a low volume month. So then we may not get those sustained pullbacks and those traditional technical corrections that we like to see, for our trading setup. But, of course, time will tell. We don't know. It could still go up, trigger this order here, and we could still, see that sell off. But as of now, it looks like there's, a commitment to definitely favor the dollar, or slide lower. We can see the size of these candlesticks. We can see that volume is definitely in favor of the downside, or I shouldn't say volume, but momentum, I should say, because we just established that volume could be low for today. So, and thin markets, this is one thing to keep in mind. When markets are thinner than usual, it gives room for the possibility of exaggerated moves in prices. So then we may see these exaggerated moves, exaggerated extensions, exaggerated pullbacks, because the market is trying to look for the next batch of orders that it has to collect in its direction, in the direction that it's trading in. And if it doesn't, it'll just keep going and going. So you may get a combination of exaggerated moves, extended moves, but also during dinner volumes, you may get periods where there is no movement, where it just stays locked within its range. So you can get both extremes, both polarities to take place. But this is Kiwi USD. So yeah, I just described that. Let me just go in and touch on a few things, okay? Well, for one, let's just talk about the actual market sentiment or the market bias. So then let's just do this. Let's just go to, let me just, what can I do? Let's just minimize this. You're going to pull up one of our favorite sites, FinViz, and just get an idea of what the market sentiment is. And as you guys know, on last Friday, we saw the markets definitely close negative. There was bleeding in the markets. We could see that the Dow fell 939 points. Of course, the NASDAQ was the worst performer, considering that it's more of a tech-based, growth-based index. And they're definitely going to be the most affected by higher interest rate expectations. So then we see, and even the earnings data on last week with Netflix and then Google Alphabet. What else? I think I can't remember, but a few earnings data in the tech sector came out bad. It did, they didn't have strong earnings. So then, of course, we know that this sector was hit, across the board, consumer discretionary sector. But we see that even the S&P 500 fell lower. And if we look at this heat map from last week, this is last week, we can see, look at it, was just a sea of red, like everything was selling. So you could have said the selling may you could have started even though last Friday, but that this was primarily due to a combination of things. But of course, what we know is that April closed as the worst performing month in 2 years, or since the beginning of the pandemic. It was the worst performing month. We haven't had a month that bad in 2 years. So let's see how May is going to open. And we're going to go to the futures markets right here. And this is what pretty much the futures market is expected to do for today. And as we look, we can see that most of our indices, if they're not neutral, they're slightly in negative territory. We see that even the Russell 2000 futures slightly lower. And if we look all the way to the right, we see that the VIX is moving up, which is our fear gauge, or our volatility index. So then whenever we see the VIX start moving up, that means that traders are sort of buying quote unquote insurance to sort of hedge themselves from any losses that they incur from a collapse in these different indices, future indices right here. So then we see that across the board, even with our European futures, DAX futures, Eurostox futures, that they're all selling to the downside. What's even more interesting is that we're seeing this being done with oil. Energy prices are also selling off as well. And this is interesting considering that we have an OPEC meeting that starts, I think it starts on Wednesday. We have an OPEC plus meeting where all of the OPEC nations, those that are part of that oil cartel, along with Saudi Arabia, Russia, just other nations are going to gather together to see if they're going to raise oil production for the summer. So then, of course, we see oil collapsing lower. It's interesting because this heat map is not giving us too many assets that we can pile into as a safe harbor or a place to park your money while markets fall lower. We see natty, natural gas, moving to the upside. Cocoa, cottons, these soft commodities. But really, to be honest with you, most of our commodities are selling off. Look at this, like gold, silver, platinum, our precious metals, copper, which is a base metal, industrial metal. They're all selling off to the downside. So, of course, from what we see in this futures heat map, we can expect markets to trade in favor of the safe haven or look for an opportunity to be risk averse, meaning they're going to try to avoid being in risky positions, holding on to stocks or holding on to high yielding assets. So then that's just for this Monday. This could just be a Monday retracement, Tuesday turnaround, but in this case, it would be a Monday continuation of what happened on Friday. So we're seeing a negative handover of that sentiment for now. So then let's see what's happening in Forex markets. And as you can see, even on the Forex side, we see the US dollar is the strongest currency at the moment, even though it's fairly neutral and flat. But we see followed by that is the Aussie, Australian dollar, and the British pound, even though they're both selling off. When you compare it with the dollar is moving so strongly that even the Aussie and the British pound are still weak and negative for the session. But the three weakest currencies are the Swiss franc, the Canadian dollar, and the New Zealand dollar. So then this clearly indicates that there is, preferred risk flows into the dollar. The dollar is just a safe place to park your money on the TINA trade. And what I mean by TINA, let me just type this in. Let me just type this in the group, TINA. This is the acronym that you need to remember. There is no alternative. So then that's pretty much what TINA is. There is no alternative, meaning that there's no other alternative place to park your money other than the US dollar. So then the US dollar is going to benefit from that. It's going to benefit as a safe haven currency, but also as a reserve currency and a good place to park your money, since the dollar is doing well. The US economy is doing fairly well. The Fed is still going to hike rates. And as long as they're going to hike rates and be as aggressive as they are, we can expect the dollar to continue to remain strong. So then, if there's any trade you want to execute, buy the dollar and sell dollar denominated assets. So this is the crypto heat map. We can see that even cryptocurrencies across the board are also softening. We see that the US dollar is the strongest even among these major cryptos. We see that the weakest cryptocurrency for today is Ethereum, then followed by Bitcoin Cash and Litecoin. So it seems as if for this Monday, where liquidity is thin, and Mondays are traditionally a low volume day, we're seeing the dollar preferred. The dollar is benefiting on that whole concept of TINA. There is no other alternative. And if we look at maybe even our 10-year treasury yields, we could possibly see why, but sometimes we may not even see why then. Let's see what US 10-year treasury yields are doing. And as you can see, US 10-year yields, which are our nominal yields, are pushing to the upside ahead of this week's Fed monetary policy announcement. So, just like we said before, the Federal Reserve Bank will be meeting. Let's see what they are pricing in, or what the market is pricing in. So let me just do this CME Fed Watch. Let's go to the CME Fed Watch tool right here. The Federal Reserve is expected to raise interest rates, be aggressive, raise interest rates by 50 basis points, which is going to be supportive for the dollar, but it may be a negative headwind for stocks. So then let's see. Okay, so then just like up here says, in 2 days, we will be having the next meeting. That's on Wednesday. But let's look here. So then right here, we can see that there's a 100% chance probability that we're going to see a rate hike. So, the market has already priced in that current expectation, according to Fed funds futures, according to different swap markets, we see that there is a 100% chance or probability of a rate hike for this May 4th meeting. And this is according to the Fed funds futures contract. But as you can see right here, there's almost a 0%, 0.2% chance that we'll just see a 25 basis point increase up to the target range of 50 to 75, because you got to keep in mind that the Fed funds rate is really not just one single percentage, but it's actually a range. It's the Fed funds, or it's the pretty much the Fed funds rate, but it's a target range. So right now we know that the current interest rate for the Federal Reserve Bank is between 0.25 and 0.50. So then right now, according to this particular Fed Watch plot, there's a 99.8% chance that we're going to get a 50 basis point rate hike, that the Fed is going to raise interest rates between the range of 0.75% to 1%. That's pretty much the probability right now. So then the market is sort of pricing this in already, this 50 basis point rate hike. And if we go, let's do this. If we go to right here, we get our chart. Let me go to the Fed funds. Let's do this right here. And let's just do this, the daily chart right here. Okay. Yeah, okay. So okay, I know we gotta fill this in, but yeah, right here, this is a chart of the Fed funds future, or the difference between the current contract and the December contract for Fed funds futures. And as you can see, I only have written in, about 5 hikes, but you can see right here that the market has already priced in, let's see, 6, 7, 8, 9, possibly 10 hikes. Let's see if we move this up. Yeah, almost 10 hikes. At one point it did. Let's do this right here, because these are separated by 25 basis point increments. So this would be 2.75, this would be 2.50. But we can see here that according to market expectations, what the market is implying that interest rates should be at 2.71 or 2.72% right now. And at the moment, what we saw is that the interest rate is really currently at 0.25 to 0.50. This is the current Fed funds range, right here. If I was to draw in this range right here, this block or this range would be the current Fed funds future range. So we can see here how the Fed is pretty behind the curve in raising rates, and that's the reason why they have to be aggressive. They have to not do it raise rates by the traditional 25 basis points increments like we see here. They have to double it and do 50 basis points. So then, right now, it's going to be interesting, to see. They're going to have to move this purple area. If we was to do this, they're going to have to move this purple area from here. Is there any way we can move this? Okay. Yeah, I don't know. Yeah, I'm confused. I'm trying to move this purple box along, but keep it the same. But you just have to, oh yeah, move all the way up to there. Yeah. Yeah, okay. Yeah, they're gonna have to move the range from here to here. They're gonna have to double it. So then that's an aggressive, action. And there's even Fed members that even suggested a 75 basis point, rate hike. But we see here that the Fed is behind the curve, and inflation and interest rate expectations are continuing to climb higher. You can see how parabolic this move is. So, the market is aggressively pricing in higher rates to curb inflation or to address some of the inflation issues. Because we all know when you go to the grocery store, if you go to the gasoline pump or whatever, you can see that the price of goods and services are much higher. Even if you look at wage data is slightly falling behind, but they're going to be forced to have to pick up wage growth to sort of help compensate for the rise in goods and services. So then this is what's really driving the dollar demand, just seeing these higher rates, because when the Federal Reserve Bank raises its interest rate, it raises the purchasing power of their currency. That sort of increases the value or the purchasing power of the dollar. And of course, the Fed has been very aggressive with it compared to some other central banks. But this is going to definitely cause the dollar to be the preferred trade. So if there's anything you need to do today, look for an opportunity to purchase the dollar. Just buy the dollar, whether it's selling US dollar denominated assets or currency pairs, or just simply buying the US dollar Japanese yen. So then this is what we see here. Let's go to the US dollar Japanese yen, because that is pretty much a currency pair that agrees or has strong correlation with treasury yields. As US yield markets go up, so does the US dollar Japanese yen. It has a positive correlation with US Treasury yield. So we can see here that the US dollar versus Japanese yen have been on this huge parabolic rally to the upside. It's continuing to climb lower. It's pretty much trading really right around the 130 handle, but it did pop higher at some point on last week. But the US dollar versus Japanese yen is primarily benefiting from the Bank of Japan's commitment or determination to sort of stay accommodative and actually keep their interest rate negative. They want a negative interest rate. So then they want to stay dovish while the Federal Reserve Bank wants to become hawkish. So then just on that interest rate disparity alone, we're going to see the US dollar Japanese yen move higher. And we see this agreement, this relationship between the US dollar and the US 10-year Treasury yields. Let's just see if I can just do a comparison right here. And let me see. I haven't done. No, wait, let's just do this right here. US 10Y. Let me do. I don't think this is the right one. Yeah, well, as you can see, we can see that US 10-year yields are moving to the upside. Yeah, that wasn't the right one. But yeah. But you can see that there was this agreement between US 10-year yields, US dollar Japanese yen, that they're both moving to the upside. There's this relationship. So then as long as we see treasury yields climbing to the upside, we can expect the US dollar versus Japanese yen to be underpinned and move to the upside. So I just kind of wanted to point that out. But for today, what's coming out on the economic docket? And then I'm going to hand the mic back over to Melvin, and he's going to continue with the session for today, do some top-down analysis, see what's happening. Okay, so let's go to the economic docket right here, and let's see what's on the calendar for today. So then, just like we said, there's a slew of holidays. Yeah, we already touched on that. And let's go down. We had some data come out early in the European session, but we want to go to the US docket. So what is next to come out? So then we got in 27 minutes, manufacturing PMIs for Canada coming out. But the key event that we will be looking at will be ISM manufacturing PMI numbers. Right now, according to this calendar, the expectation is for a 57.6% reading for the month of April in manufacturing PMI. That's just pretty much a measure of the manufacturing activity in the month of April. So we can see here that there's a slight pickup here in manufacturing. So that if we do see a similar pickup in new orders and prices, then that could be an indication of growth. And we saw on last week that we did see negative growth for the first quarter. We didn't see strong, solid growth. I think it fell like 1.41%. The Q1 or the first quarter did. So then if we see this number perform well, if we see manufacturing PMIs come out solid, then that can reinforce that the growth narrative isn't over with, that we could still see sustained growth in the economy. We just had a blip and we just had, a miss during the first quarter. So then, yeah, so then we're going to be paying attention to this number. Now, if this number comes out in line with expectation or even better than expectation, that's going to definitely be a tailwind for the dollar and boost the US dollar strength. If it does come in softer, then we may see some softness or weakness, but it won't be too much, simply because there's huge dollar demand. And due to the Federal Reserve Bank's commitment to hike rates, they pretty much already pretty much telegraphed that to the market and already verbally confirmed it. So then we have that coming out, and then that's pretty much it for today, except for what we have later on during the Asian session, which is the RBA announcement. Let me just do this. That would be considered tomorrow. And we have the RBA interest rate decision right here, which is going to be interesting because recently, like, the RBA has had to adjust their interest rate forecast simply because the inflation reading last week came out too high. It came out well above and beyond their target of 2 to 3%. They had a CPI reading of 5.1% year over year or on an annual basis. So based on that, it's going to force the RBA to move much sooner than they had anticipated. Because beforehand, they were saying, no, we're not going to even consider hiking rates until later on, close to the third quarter, like around July or possibly even August. But based on the data, based on what they're seeing in inflation, they're going to have to act now, or either act in June, but really preferably act now. So then right now, according to swap markets, the markets are pricing in a 15 basis point rate hike because they're in a rock and a hard place, the RBA, the Reserve Bank of Australia, because they don't want to intervene. They know they need to curb inflation because inflation is at 5.1% there. They know they need to curb inflation, but they don't want to do it before a general election. And later this month, on May 21st, they have their general election, and they don't want to intervene in the market to sort of help turn votes, or just they don't want to intervene and do anything that could possibly change the voter outcome or the voting outcome. So then they're sort of in a rock and a hard place to try to finagle it. So then some are saying, well, then a 15 basis point, they'll be moving in the right direction, even though it's not the standard 25 basis point, but at least it's them moving in a direction to address the out of control inflation. So then that's going to be, so then of course their monetary policy announcement is going to be tonight. And this is the big question mark. What is the RBA going to do? Is the RBA going to follow suit with the Fed and other central banks? Are they going to sort of still remain cautious and slightly dovish? So yeah, we'll see. But yeah, that's pretty much it for now. And right now we're going to turn the mic back over to Melvin, and he's going to continue talking about the markets for today. All right. So right now, what we're going to do, we're going to do some top-down analysis. We're going to, do something that really I believe is important. If there's one approach to trading that you need to do, it's really using proper top-down analysis, where you start at a higher time frame and you work your way down to a lower time frame to get a precise bird's eye view and an understanding of what's taking place, so that you can enter some high probability trading opportunities. So then that's what we're going to do in a little bit. But before I do that, for those, if you're in the pound CAD trade, then move your stop to break even. Right now, I know price hit that institutional level and now it's snapping back or it's falling back. But you can just move your stop to break even just to mitigate risk if you guys want to do that. Now, with that said, I guess we can move forward and talk about the first pair that's on our radar. Let me first go to the weekly chart. And let me go to Australian dollar versus the Canadian dollar right here. Now, as you guys heard, Marvin just mentioned, let me delete this. Marvin just mentioned the fact that, we do have an RBA announcement later on tonight or this evening, especially if you're in the US. It's our evening in the US. But, we do have that announcement coming out. So then that's something that you do need to be mindful of. You may not want to be in this trade when that announcement happens because of the volatility and what could all happen. But for the most part, we're still going to describe it because, there's a likelihood that, price may bounce up. They may raise interest rates. Who knows? We don't know what they're going to do. But seeing what we're seeing right now, we can clearly see that for the most part, price was in, a period of consolidation. Well, it still is in a period of consolidation. But what we can see here, if you look left, we can see that price is hitting an important key structural area. Look left, structure leaves clues. As a matter of fact, I might as well just do this one. Let me change it a bit, and let me do the coordinates, and let me go to 91 cents. I'll just do 91 cents right there. All right. So then right in this area right here where we see that price came and it hit this area on multiple occasions, we can see that it hit it right here. It acted as support right there. Support right here. You guys get the notion. Support right here. Resistance right here. resistance right here. In other words, when price came down and it hit this area acted as support right here, and we saw price bounce up. In other words, it acted as a floor. So then price fell down, bounced from this area again. This area acted as a floor, and then it did the same thing right here. Even though it was short-lived, price pushed down, came back up. This area acted as resistance, price fell down. But you guys get the point. This is a key level or key area that we have to pay attention to on this particular chart. We even have hidden structure right around here with this hesitation candle right there. So one thing we can assume is that in this area right here, this area is an area where we expect for buyers to come in. So then that's what we're going to assume. We're going to assume, hey, the buyers are going to come into this area. Let's make preparation. So yeah, let me change the color. Let me make this green like that. Okay, so right here we see that price is testing an area of support. Look left, structure leaves clues. This whole zone, whole area is an area of support. Therefore, what we can assume is that this area will act as a floor, is like a bouncing ball. If you bounce the ball upon the floor, you expect that ball to bounce to the upside. And that's what we're expecting on the Aussie CAD, since this is a weekly level. And since these levels of support and resistance on the weekly levels and daily levels are more reliable, we can make that assertion and that assumption that we're going to see price bounce to the upside in a little bit. Now, if you go down to the daily chart, what we can clearly see on the daily chart is that we have this nice impulse move into this zone of weekly, daily structure, you could say. But if you look at the stochastics, you tell me, is the stochastics overbought or oversold? Now, I know some of you guys use the RSI, which is another momentum indicator. But for those who may not know, stochastics is a momentum indicator, is this indicator at the bottom. And whenever price is below this line, or whenever the stochastic is below this line, it represents either overbought or oversold. But when it's above this line right here at the top, which is 80, it's overbought or oversold as well. But yeah, okay, Rob said oversold, exactly. Whenever it's below 20, or whenever price is testing the 20 in the stochastics, then we know it's oversold. And you should look for a possibility for price to reverse and push to the upside, especially since it's hitting an area of demand or support. Remember, whenever price hits a weekly or daily support level, and whenever the stochastic is oversold, then what you need to do is expect a reversal to take place. So then that's what we're going to do. We're going to look for a potential reversal to take place in this case, and it's vice versa too when it's the opposite direction. Whenever price hits an area of resistance, like right here, hit an area of resistance, stochastics became overbought right here, then you look for an opportunity to sell. But you have to wait for things to align first before you do that. So in this case right here, we look at price is responding to this area of structure. And if you zoom in to this move to the downside, what we can see right here is that momentum to the downside started weakening, right? For days prior, we see these nice bearish red candlesticks. Remember, each candle represents 1 day's worth of movement. We see these nice, strong, nice bearish candles. Then all of a sudden, momentum starts to wane. It starts weakening. And these candle bodies get smaller. And it looks like momentum is weakening. If you guys can see that, let me know. But also something that we could see is if you look at these highs, these wicks of these candles right here, what is forming is sort of like a structure level, right? It's forming lower highs. So then what we can do is draw a line across these wicks right here. Because what we could assume is that price may be in the midst of a reversal. And if we get a break above this line, then we can expect a move to the upside. So then what we're going to do, we're going to keep this line here. Let me make sure that it's visible on a smaller time frame. Yeah, let me do this because sometimes doesn't do that. Okay, so and let me do this. We do 23. All right, so right now we have this trend line that looks like it's forming. We may be able to see things a little bit better when we get down to the 4-hour chart. So then what we're going to do in this case, we're going to drop down to the 4-hour chart and we're going to see what the 4-hour chart gives us. All right, so right now we're looking at the 4-hour chart. What we can do is modify this line right now based on what we see on the 4-hour chart. And what we can assume here is that price is in the midst of a reversal. And there's a number of ways we can play this. We can either wait for price to break this trend line to the upside, but for me personally, I like to wait for price to break this level right here. This is the level that I'm going to wait for price to break and close above before I decide to do anything. So in other words, what I'm going to look for is something like this. I'm going to wait for price to push higher, break above this yellow line, and break above this high right here. As soon as it breaks and closes above it, then I would wait for price to retest this area, because this area acted as resistance before, in this case structure before. It can act as support now, or structure now on this pullback. I mean, so we have this break to the upside, pull back to retest this area, and somewhere right around here is where we're expecting price to push higher. So then from there, we'll just do a measure move. Do a measure move. We'll take the length of the head, or from this low all the way down to this swing high right here, and that would be where our target would be. Probably like right around here, which is not too far from these highs, this structure area right here. So that's what we're going to look for right now on the Aussie CAD. We're going to look for that. Be mindful of the fact that we do have an RBA announcement later on today, so then this could change slightly, but for the most part we're testing this zone of weekly and daily demand. So we're expecting price to push to the upside shortly, but when will that happen? We don't know. So then we have to wait for price to tell us when momentum is shifting, when momentum is changing. We don't want to assume anything. We don't want to pick tops or bottoms. In this case, we'll be picking a bottom. We don't want to pick a bottom. We want to wait for the bottom to sort of confirm a rotation, and then look for that breakout. And that's one thing I want to say also, just to give you guys a slight tip. I know we talk about this often, but just remember this: whenever price hits an area of support or resistance, like in this case it hits an area of support, typically what you would see on a smaller time frame, you'll always see price slow down or consolidate first. You'll see that battle between the bulls and bears, and then price will shoot up. And it's the same way when price pushes up to an area of resistance. You'll see that consolidation, or that slow down on a smaller time frame, and then you'll eventually see price break to the downside. So then remember, whenever price hits support and resistance, you typically want to see that on a smaller time frame. And if you trade that way, if you wait for the breaks of the consolidations that happen on the smaller time frames, it'll help with your accuracy. It'll help with you when you execute trades. You'll be more accurate and more precise. Like, let me see if I can show you an example. This is just a teaching point right here. Let's go back up. Well, let's do this one right here, right? We can see here, even though this is 4-hour structure right here, I'm just going to use this as an example. 4-hour structure right here. Price is hitting this area right here. Now, will we see topping on a smaller time frame? Well, let's see. So then what day is this? April 12th, around this time. Let's go to the 1 hour. Let's see what we see. And on the 1 hour, we see topping, right? You see that? Right around here, you see price, push up, and then it starts consolidating. And then on this is the break to the downside right here. As soon as price breaks to the downside, what happens? Price pushes up to retest this area. And then we see From here, you could enter the sell and price continues sliding lower. So just remember that whenever price hits support and resistance, it doesn't matter what time frame that support or resistance is on. Typically on a smaller time frame, you're going to see consolidation, topping, bottoming. You're going to see something like that. And in the case of resistance, you'll see topping. Like we see here, we see this topping type setup. But at support, you'll see bottoming. Like right here, most likely this happened at an area of support. This bottoming right here. Let's go to 4 hour. Let's see if that's the case. This is a little, teaching point for you guys. And yes, to some degree, yeah, this is support right here in this area. We see price hit this support area right here, and then we see that consolidation happen before price exploded to the upside. And really, trading is really all about seeing that. Really, if you was to simplify it, it's all about looking at how price is moving around support and resistance and wait for that topping or that consolidation to complete and break before you do anything. Like for instance, right here, you see that price testing resistance, right around here. Do we see topping on a smaller time frame like the 1 hour? Drop down to the 1 hour. Oops, let me delete that. And come down to the 1 hour, and yes, we do. We see what some people would call almost like a head and shoulders type setup. Left shoulder, head, and right shoulder. We have this type of setup. Boom, 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 down and up and then down. So this is what we call a head and shoulders pattern. You'll see that every time. But to simplify trading, it's like seriously, like it doesn't have to be that difficult. All you have to do is look to see if there are consolidations and breaks around some key levels of support and resistance or supply and demand, and then look for your opportunity to buy or sell on a pullback in price. All right, so let me show you guys one more example. I'm going to show you one more example, and then we're going to go from there. Let me do this right quick. Let me go to the pound Swiss franc. Let me do pound Swiss franc, and let's do the weekly chart. And let me clean this up a little bit. All right. Oops. All right. Okay. So right now we're looking at the pound Swiss franc. We're currently looking at the daily time frame, and as you can see, price is responding. Well, we can see last week that price hit this area of support down here. Look left, structure leaves clues. We can clearly see it right here. This area of support right here. We can look historically and see that this area was a key area that acted as resistance, and what was once resistance is now acting as support right now. So we can clearly see that what was once the ceiling is now acting as the floor. So we can look at last week's weekly candle. Remember, this is the weekly chart where each candle represents a week. And we can see that price came and touched this area, and then it bounced higher. This is the reason why we have this long wick right here to the downside. It's because buyers came in and pushed price to the upside. So then what we can assume is that this level or zone is an area of demand, and there's buyers positioned here that may want to push price higher, possibly to test this area up here. So then what I want to do is draw in another zone right around here, because we could potentially see price go all the way up to this level right here. But this is the weekly chart. So yeah, I know I just got to notice, yeah, price actually stopped us at break even. So of course, we're out of that pound CAD trade. We should have closed out once it hit that institutional level when it pushed to the upside, but we didn't make anything off of that one. So we can definitely yeah, it's pretty much break even. All right, so what we're going to do right now, since we see that price is consolidating, it looks like price is trapped in this small range, moving up and down between these two levels. It could be moving up and down for a while. what we want to do is drop down to a smaller time frame, because we may want to see if we can trade this move up here, up to the highs. That's what we may want to do. So then let me just zoom out. And what I'm going to do is drop down to the daily time frame. All right. And what we can see here is that price came and it impulsed to the downside to this support right here. But we see for, well, last week, what we saw on the 27th and on the 28th of April, we saw what you would call sideways moving candles. In other words, whenever you see this, especially at an area of support or resistance, in this case, it's support, then what we can assume is that there's consolidation on a smaller time frame. So what I'm going to do is drop down to a smaller time frame to see what is happening on this chart. We see that price pushed to the downside in the support area. Stochastic is testing oversold, or is oversold right now. What we can do is look for a possibility to buy this particular pair, but we need to wait for the proper price action. Let's drop down to the 4-hour. And on the 4-hour, let me ask you guys this question. What pattern do we see on the 4-hour? What type of reversal pattern do we see that can give clues to the fact that price may want to push to the upside or rotate higher? So I'll give you guys a few seconds to chime in. Okay. I know Stuart said double bottom. Yep. Adam said W pattern. Yep. And you guys are correct. What we see is a double bottom, or what you can also call a W pattern, because this forms the shape of a W. We have right here, this is first bottom or left bottom. Price comes down, forms this right bottom, respects the same area as support, and then pushes higher. And it forms what we would call a double bottom or a W pattern, because it forms the shape of a W. And whenever you see that, then we know that our bias is to the upside, and we need to look for an opportunity to buy on a pullback in price. So in this case, we're going to look for price to pull back, possibly to test the neckline right here, which will act as support, and then look for an opportunity to enter that particular buy. So let me just remove this line right here, and well, let me just do it, all of it, move it. Okay, so you see this double bottom. What we can do right now is look to see where price could retrace to, and we already did that. We looked at structure right here, and you can just say look left, structure leaves clues. As a matter of fact, let me just drop a line right here, right around here, you could say, and let me change the color. So right here, we see that, we have this key level that acted as, we see wicks right here, resistance, support for a period right here, resistance right here. And we can see it acted as resistance here and resistance here. And what was once resistance could become support. So that's what we see. We see this structure area. And then also what we see right here is, of course, this moving average right here, which is what I was going to talk about. This moving average is within the same vicinity as this structural area. So then we have confluence here. This is what we call confluence, or structural confluence, because the 20 SMA line, this blue cyan line right here, not only shares with us directionality, but it also can act as dynamic support. So in this case, we see that we have the 20 SMA in this area as well. So let me just draw out a zone. So to me, the zone that we need to pay attention to is right around here. This is, well, let me push it up a little bit higher, right here. Right here. This will be our zone of demand or support right here. So then what we're going to want to see, we want to see price retrace all the way back down here, test this level or test this area before we see the buyers come in. Now, how far will we look for our buy? Well, our buy will be based on the geometry of this double bottom right here. So from the lows all the way up to the highs, we'll just draw an arrow, and that can represent where our particular target would be. maybe somewhere right where this structure area is, right around here. So let me just draw that in. So we have this structure area right here. This could be our target somewhere around here. But yeah, this is the pound Swiss franc. This is what we're looking for right now. We're just waiting for price to come to us. So all right. Yeah, and it's crazy because I know we just got stopped out of this trade, this pound CAD trade, and it's bouncing back up again. That's the like, I'll go back to it later. But yeah, so all right, we're looking at this trade right here. This is the pound Swiss franc, and we're just waiting for price to come to us. So hopefully we'll get that type of price action. If not, then all is well. We don't have to worry about it. All right. Are there any questions before we move forward? Going once, going twice. All right. So yeah, that's what we're looking for right now. This double bottom and pull back into this area of support. All right. All right. Thanks, Dan, for coming. We really appreciate you. And yeah, we'll talk later. All right. So yeah, I guess that's pretty much it. What is it? It's 8:30 right now. I don't have really too much on my radar for today. I'm gonna pretty much take it easy for today. And I know I need to call a few of you guys today. So then I'll definitely touch base with you. If you can't talk today, then I'll definitely touch base with you to see how things are going. But for the most part, all is well. Now, I know quite a number of you guys want to get funded. So then we're definitely going to move in that direction really soon and start, make sure that you guys get funded, especially during this summer. We're going to start moving in that direction really, really soon. So, yeah, we'll give you guys more details about that later. But are there any questions about anything dealing with stocks, anything dealing with commodities? Because I know we didn't really talk about stocks. We didn't really talk about commodities that much today as well. We were mainly focused on currencies, which is our specialty, but we do also look at stocks as well, and we could trade those as well. But are there any questions in regards to stocks, in regards to commodities? When I speak of commodities, I'm speaking of oil, gold, silver, platinum, soy, wheat, anything like that, milk. Those are commodities, and you can trade those in the market. But if you don't have any questions, then I guess we could end today's session at a decent time. It's 8:30. This is a decent time. But yeah, that's pretty much it. Thank you guys so much for coming. I know I mentioned how on a pound CAD I closed out prematurely, and now price is popping right back up again. So it may continue pushing higher. Like it went up, came down to our entry again, pushed up, came down again, and now it's popping back up. So then, we may miss out on this setup that was supposed to work for us perfectly and beautifully. But, of course, you make your mistakes and you got to live with it. All right. But yeah, price looks like it may want to push higher now. All right. So then that's it. Yeah. Thank you guys so much for coming. And as we always say, remember to always count your blessings, not your pips. And we would definitely talk to you guys soon. And thanks again. Have a wonderful rest of your day. And you don't have to force it today. Remember, the most important days of trading is really between Tuesday and Thursday. So if you just stick to those three days, you'll be fine. But all right. Have a wonderful rest of your day. We'll talk soon. All right. Okay, then bye.